Brought to you by Tailored Wealth, helping business leaders live their version of a rich life.
Welcome to another edition of the Making Sense of Your Money podcast, where we cut through the financial noise and help business leaders to make smart, confident money decisions. Welcome, ladies and gentlemen, to another edition of the Making Sense of Your Money podcast, where we help you to take control of your finances, minimize uncertainty, and maximize your wealth potential. I'm your host, Dan Pascone. I am the founder and CEO of Tailored Wealth, and I'm excited today, first off, to be in studio. We're usually recording these remotely, so we're actually in our studio today here in Fairfield, Connecticut, and I've got with me a special guest. I've got Brandon Gittison. Brandon is a blue-collar business owner. Yes. And I'm really excited to have Brandon on today because unlike many of our other guests, Brandon is really a specialist around cash flow, and he's been involved in different types of businesses. So Brandon, first off, welcome. Thanks for coming in, and good to have you today.
Thank you, Dan. I really love this setup, and very eloquent introduction. I can tell that you're a seasoned pro at this point.
Yeah, we've been doing this for a little while now and having a lot of fun with it. And, people enjoy hearing from different experts in the realm and the field of financial services. And I think that you're going to come at this from a completely different perspective. We also love to talk about entrepreneurship. There's a couple of topics that we can weave in right there. But listen, Brandon, before we get into any specific topics, just tell our audience in about 90 seconds, give us a quick overview of who you are, what you do, and how you've gotten into your field.
Sure. I'll take it back to when I was working at the Junk Luggers. With the Junk Luggers, it's pretty timely too because the founders are from Fairfield and we're filming in Fairfield, so I think that's a great starting point. And that's when I really fell in love with the home service space, or even, you can call it the blue collar space. And then I went into the real estate field for a little bit. I did mortgage brokerage. I've participated in a few real estate syndications, which is basically where you use other people's money to buy property.
Right.
And I like real estate. I really like cash flow. And when you think about cash flow, real estate might not necessarily be the best vehicle, but people get typically very infatuated when they think about real estate and they correlate it with cash flow.
Right.
But that's really the last thing that I think about now. And I'm really focused on the blue collar space. So I started a pressure washing business last year and it's been doing really well. And my goal is to buy a blue collar business this year.
Sounds good. I told Brandon before this, I have some goals to do a similar thing. But, when you talk about cash flow, when we run and develop a financial plan for our clients, the first item on the financial plan is cash flow.
Yeah.
Right? Because, how important that is. Everything else in your financial world comes after you identify what's the cash flow and how do we optimize cash flow. So tell us a little bit about how you think about that, and tell us a little bit about why you've chosen the types of businesses that you're in and you're looking to get into, and how that correlates to your personal cash flow.
Yeah, absolutely. I would say, just as a sort of starting point, when you don't have cash flow coming in on a monthly basis, you kind of create a scarcity mentality.
Sure.
So it's harder to make long-term decisions without cash flow coming in.
Right.
Because you don't know where that money is going to come from. So I think cash flow is very, very important. That's why you have to speak with experts like Dan. And in terms of the businesses that I'm looking into, I like paving, I like excavation, landscaping is really up there as well, line striping, I really enjoy. A lot of the businesses that are in the blue collar space, because I used to work for a big blue collar company with the Junk Luggers, so that's where my expertise is. And,
right.
We were kind of chatting about this earlier, but there's a lot of opportunity with all of the baby boomers with zero succession plan.
Yeah, so tell us a little bit about that. It's a really, really interesting concept that I've seen get popular right now. We've got a number of clients that have invested in these sort of blue collar businesses with baby boomers that are looking to retire, successful businesses, but they don't necessarily have a legacy plan. They don't have maybe someone in their family that's going to take over the business. So tell us a little bit about your experiences in looking at those businesses and maybe being close to some of your connections that have owned them. What sticks out to you as far as the opportunity is concerned?
There is a lot of opportunity, but you really have to look and you have to be vigilant. And every single person that you speak to, get super specific on what you're looking for, right? You could say, hey, I'm looking for either a landscaping or a tree removal business that does between $1 to $3 million a year in gross revenue, the shoreline of CT, right? So be very, very specific with what you're looking after in terms of industry, revenue size, geography. Because if you say that, like, I'll buy anything, it means that, people won't know like what to keep you in mind for. So I would say just be very, very specific with what you're looking for. And then start to build relationships with referral sources, not just the business brokers and not just the M&A people, but look at like CPAs and lawyers, for example, because they're always speaking typically with these small business owners who could refer you on a consistent basis.
Yeah. We bring a lot of CPAs and attorneys on this show, actually, and we love to hear their expertise. And sometimes we get into this topic. So I deal with a lot of our clients that, see the value in cash flow producing investments. And I think you kind of touched on this earlier, but I want to get your take, given that you've got some experience in real estate and real estate syndication. Most average investors think real estate and they think about cash flow.
Yeah.
So and they think about yield and they think about consistency, right? And in many cases that can be the case. We're in a little bit of a difficult real estate market right now, as most folks understand. But tell us a little bit about how you've looked to find alternative businesses that can still produce that level of cash flow, whether it be actively or passively. We'll maybe get into that a little bit later, and how those compare to real estate.
Yeah. So it's really interesting. When you look at real estate, you're basically buying it when it comes to commercial real estate specifically, you're buying it on a cap rate, right? So, say that you're buying a multifamily property here in Connecticut and say, it trades at just, I don't know, say it's at an 8 cap, which means that if you buy a multifamily property for $1 million, it'll typically produce around $80,000 on an annual basis after all of your expenses are paid but that won't include the mortgage. So it's not even a true 8% of that $1 million. But with like a home service or say like a blue collar business, it could be double or it could even be triple that. Far more substantial when it comes to cash flow.
Yeah, that makes a lot of sense. And, I think a lot of folks say, well, I don't know anything about the landscaping business, or I don't know anything about the excavation business. How could that be a potential investment for me? Talk to the audience a little bit about how you could potentially use this as a passive investment vehicle, like people have used real estate for hundreds and hundreds of years for. So let's talk about that concept.
Yeah. So we were talking about hiring an operator. One of the metrics that we were just previously chatting about is EBITDA. So that's, earnings before interest, taxes, depreciation, and amortization. So it's your net profit, basically. Right. But you want to make sure that when you're buying a business, and if you want it to be passive, that you have enough of that net income coming in where you can pay for an operator's salary. That's how you get it to be a little bit more passive. I don't think it'll truly be 100% passive, because you should look to have something that you can add to that business that will ultimately enhance it, even if it's less than 5 to 10 hours per week. But there has to be some excessive cash coming in where you can pay for a salary to make it passive.
Absolutely. Yeah. I mean, I think it's a really, really interesting concept. And I get a lot of our clients that ask, well, we're well diversified. We've maybe got our retirement accounts set up in a well diversified portfolio, and we own different asset classes, stocks, bonds. Maybe we own a little bit of real estate within funds and stuff like that. and they want to figure out, well, where can we diversify? And I think the natural next thought is to own some form of real estate. So would you say that like the passive investing in these blue collar businesses could be somewhat like investing in real estate, but having a property management company if you're bringing in the operator, so that you're not dealing with maybe the day-to-day headaches of the business, but you're overseeing the overall strategy?
I think that's a great example, and I think that's a great analogy too. If you hire an operator, I think it obviously depends on that business as well. I still think it will be slightly more time intensive than owning real estate, even with a property management business. It'll be a little bit more time intensive, but for sure having an operator, it'll make it a lot more passive than you running the operations basically.
Sure. Now let's talk a little bit about the opportunity in this investment space today, because what I was starting to get at is I get questions from investors, from clients, from just people that I interact with around, where can I get really good yield today? Where can I get cash flow, which is where we started? And certainly we've got a nice formula for putting together fixed income portfolios that are doing well from a yield perspective. But the idea of true ownership to produce passive or partially passive, we'll call it that, is an interesting concept. So one that I like a lot, and I've heard a couple of different entrepreneur type experts talk about, is this idea of working with and finding business owners that are looking to retire. And it's such an opportunity right now, Brandon, as you know, because you've got this baby boomer generation that's retiring. And so you think about all the opportunities that come there, right? So I see that in my space because we have plenty of baby boomer clients that we're helping them to retire. But there's also these baby boomer entrepreneurs that are looking to sell their businesses. And maybe they have their kids where they've built a succession plan or a family succession plan, but many of them don't. So tell us a little bit about how you see that opportunity moving forward.
To your point, there are a lot of baby boomers that just have no succession plan. I mean, for me, I'm really involved in Rotary. So for those less acquainted, it's basically just a civic group. You meet once a week and you find certain causes within your local community to fundraise for. And you see a lot of business owners that are a part of Rotary. So I've met a handful of business owners, specifically within Rotary, that, they're in their 60s, 70s, that just their kids don't want to take it over, or some cases they have no kids. I think ultimately they really want to buy it at a price. They want to sell their business not only at a price that works for them, but price isn't necessarily their first thought. Right. Their first thought, more often than not, especially if they've owned it for 20, 30, 40 years, is that they have their identity wrapped up in this business. Right. They want a person who not only could run the business, but who will take care of their employees, who will build a great brand and make sure that their business lives on into the future, right? So oftentimes, money isn't the biggest hurdle. It's actually being a fiduciary of their business, operating it with really good intent, really good knowledge, and just optimizing it to your best ability, basically.
Yeah, it's their baby, right?
Yeah.
It's their baby. And you're right. It's at the end of the day, it has to make financial sense on both sides. And to your point, there's a lot of these deals that can be really mutually beneficial. But they care about the operator coming in and keeping their brand and their legacy going through that business. And if you're someone that's serious about business and serious about the customers that you serve in whatever space that you're in, you can find some operators that you can be a real major benefit to. And like I said, the finances can end up working out really nicely on both sides. One of the concepts that I see used pretty often, because what I always get asked is, okay, well, Dan, like, I don't have several $1 million sitting in cash where I can just go buy these businesses. So maybe talk a little bit about what you've seen from a financing perspective, because there's a lot of different creative ways to finance these deals.
The biggest thing, and I would say the most common, what most people think about is an SBA loan or some form of a bank loan where you can, get really high leverage, which is another huge benefit to these small businesses compared to real estate, right? Because if you're looking at a commercial property, you could get a loan for, call it 75% of the property value. But when it comes to these businesses, you could get a loan up to 90% of the purchase price. Yeah. So that's pretty substantial. And then, to cover that down payment, you could have the seller carry that note in a second position. So basically, they would be subordinate to the senior financing on it. You could also raise that down payment from one investor or a handful of investors as well. Or you could do no bank loan. You could buy it just on seller financing and then, raise a small portion from another investor. There's a lot of ways to buy these businesses. Like, it's not that you lack resources. It's just resourcefulness, basically.
Yeah, well said. The idea of some form of seller financing can be really attractive if you look at the numbers on both sides of the table. And what I love about that is, I talk a lot about taxes, but seller financing can be really, really beneficial from a tax perspective for both the buyer and the seller.
Yes, absolutely. Nobody likes to pay Uncle Sam. So if there's ways to kind of mitigate that or, just not have to pay as much, then I think we're all happy.
I think our audience likes to pay Uncle Sam less than even most people do. That's why they tune into our content. So yes, good stuff there. All right, so Brandon, we're going to shift gears a little bit. We're going to talk a little bit about you. All right.
Yeah, sure.
So first off, one of the things that I've noticed and learned about you is you're a really masterful networker. So I want you to tell us a little bit about how you think about networking, how you think about referral partnerships and business relationships, and what you do to form those.
I've been thinking about this a lot, actually.
Okay, great.
So I'm kind of stammering because I do think about this quite a bit. And I would say the biggest thing when you're out there networking is just to build rapport as quickly as possible. The quicker you're able to build rapport with people, the quicker you'll be able to get referrals. I think so. And there's an acronym that I came up with, but this is really the foundation for how to build relationships, right? Okay. So it's CVVF: commonality, value, vulnerability, and frequency. Okay. So the more in common you have with a person, that'll enhance that relationship. Yep. The more value you're able to provide that other person, that'll enhance that relationship. And value could come in the form of introductions. You could invite them to an event. It could be anything. You could send them a book recommendation. Vulnerability, I say this with an asterisk, just be careful who you're vulnerable with. And it's not about, being 100% vulnerable or not being vulnerable at all. It's just, just sort of be cautious with that. And then the last one is frequency. So the more times you're in touch with a person, that'll ultimately enhance that relationship. But that's how you network with people. You could go to events. We met through LinkedIn, right? So you could do it in person, you could do it online, but just think about those four things as commonality, value, vulnerability, and frequency, and that'll enhance all of your relationships.
Absolutely love that acronym. And I think nowadays you can really use it and use that acronym and that framework and combine it with traditional networking means. To your point, you're going to a lot of events, you're in some different groups within your community, which I am as well. And then you combine it with the digital means, which LinkedIn is the ultimate networking 100%. Platform. And I can't even tell you the amount of great relationships that I've formed on LinkedIn. And a lot of it comes from the four things that you mentioned there. Yeah. So that's really, really cool. Thanks for sharing that. All right. So if you don't mind, share with us a challenge that you've faced to this point in your life and how that's shaped the way that you do business.
Ooh, that's really good.
Yeah.
So I would say with starting my pressure washing business, initially the challenge was acquiring customers. I think a lot of small business owners, when they're first starting out, they have that challenge. But overcoming it was really networking like crazy and looking to meet people who could be referral partners, people who I could refer as well. So it would be very, very strategic. So other people that are in the home service space. So think like landscapers, people who own roofing companies, painters, plumbers, people who are inside the home of a property because they're looking at the outside and they're a great referral source. So initially it was leads within my pressure washing business, but how I overcame that was just networking like crazy.
Cool.
Because there's a million ways to gain business. You could run Google ads, you could do cold outreach, but the best way is through warm intros, like 100%.
Absolutely. I couldn't agree more with that. Couldn't agree more. All right, awesome. So now we're going to shift gears. And I didn't tell Brandon about this. I never tell our guests about this. We're going to hit the lightning round. You ready for the lightning round?
Yeah.
All right. We're going to have some fun. So, Brandon, this one's simple. First thing that comes to your mind, some of these are going to be quick one-word answers. Some of them you can feel free to kind of explain your thoughts around. You ready?
Yeah, I'm ready.
All right, let's do it. Coffee or tea?
Coffee.
All right. Cats or dogs?
Dogs.
Okay, I like it. He's quick. He's quick. What is one tool or piece of technology other than your phone or your computer that you can't live without? One tool or piece of technology. Could be software as well.
Something I just got, QuickBooks.
QuickBooks, okay, yeah, I got. I'm using QuickBooks to run my business as well. All right, I like it. Give us a quote or a phrase that you love about money or success.
So this is not about success. It's just like a really good quote.
Cool.
But we earn a living by what we get. We live a life by what we give.
I love that. I think that's spot on. That's a really good one. I love that. Do you have a book that you enjoy on either finance or business?
So the one that we're both reading right now by Cody Sanchez.
Main Street Millionaire.
Yes, thank you.
Good one. Very good. I just finished it. Very good concept, and it kind of talks about the concept that we were hitting on earlier.
Yeah.
Do you have a personal hack that you can share with the group?
Ooh, a personal hack. I would say intermittent fasting. Okay. And like it's not just about, restricting your eating, but when you have to figure out what you want to eat, you spend, I don't think people realize like the amount of time they spend just trying to choose what they want to eat, number one. And then number two, driving to a place, ordering their food. If you could wait, you are so much more locked in when you don't eat because it won't spike your glucose. Like it is pretty insane.
Yeah, that's a good one. I do a moderate version of intermittent fasting. Usually just trying to do the early dinner, late breakfast, so I kind of get it that way. But the idea of thinking about what you have to eat, making decisions and time spent around it, people waste a lot of time doing that. So I have a couple things that I eat for lunch, but they're right in my office, and I can usually literally turn my chair around and get at them. So,
nice, Dan.
So that's good.
Awesome.
All right, I love it. One bucket list item that you've already accomplished.
That's a really good one. I would say a cross-country road trip.
Nice.
So, yeah.
Nice. That's actually on mine as well.
Yeah?
I have not done that, so
Nice.
So that would be on mine. I like it. What's one financial milestone that you're working towards?
One financial milestone that I'm working towards. I would say to cross $20,000 a month in my business.
Got it. Love that. That's a good one. I know you'll be there soon.
Thank you.
If you could give one piece of advice to your younger self, what would it be?
Focus.
Focus. Okay, I like that. Very simple, to the chase.
Yeah, I just want to touch on that. There's a lot of shiny objects.
Sure.
And it's important to listen to other people, but listen to other people where they have the experience to back up what they're saying. And also, make sure they have the best intentions towards you as well. And listen to your own tuition as well and use a few of those things to make the correct choices in life.
Love it. Very well said. Great way to close there. All right, last, Brandon, if our listeners want to connect with you, collaborate, maybe work with you, get to know you better, what's the best way to reach out to you?
2 forms, Instagram Brandon Cashflow, and then my business page, Under Pressure Washing Pros.
Great.
And then LinkedIn, Brandon, Gidicsin, Gidicsin.
And we'll put all that in the show notes afterwards. So, Brandon, thanks for your insights. It was
Thank you,
great
Dan.
having you today. And this has been another episode of the Making Sense of Your Money podcast. Everyone, thanks for joining us. And let's go out there and make you some wealth.
Love it.